Good morning. This is the video newsletter for Buy Sell Short for Sunday, August 7th. What can we say? Talk about an ugly week on Wall Street. Over the last 2 weeks, we're down 1,500 points. And, things just got even crazier on Friday. What looked to be almost a picture perfect high volume bottom reversal after the big tank. We got a little spanner thrown in the works. Standard and Poor's, one of the three blind sheep, and one of the big reasons the global financial meltdown actually happened. These guys were a large part of it. They come out late Friday, downgraded the U.S. debt by one notch. Explains a lot of the action we saw on Thursday and Friday. As you know, the markets are as crooked can be. And, those in the know were given the heads up that S&P was going to actually do that, and they got out of the way. That was likely the reason for this big tank here on Thursday, not the European debt crisis, although that is another lingering issue right there. But, obviously the rats fled the ship early, as they always do, and then started buying on what looked like to be a great reversal there on Friday. Of course, if you're going around checking the message boards and chat rooms, it's the end of the world. All you can see is market crash coming Monday. Look for big sell-offs. Saudi Arabian market down 7%. Israeli market down 7%. Come on. These markets trade like a million shares or 10 million shares. Absolutely immaterial. Big key will be Asia tonight, and even then, perhaps I'm a little bit delusional, but things have gotten so bearish. We are down so much, and really, if you step back, what does the S&P downgrade of the U.S. debt mean? Absolutely nothing. It's already priced in. So what we're probably looking at tomorrow is doing some shopping on some of the high beta stocks, high volume large cap plays. Will be looking and going shopping for some put or calls in stocks like GOOG, Google, Apple, Caterpillar, the SMH. So shopping time. We've been patiently sitting on high cash for the last 3 weeks. We've been 90 to 100% cash over the last 3 weeks, going home each and every night. And this is why. You've got traders getting destroyed right now, and here we are sitting high cash. We can pick our spots to go in and start shopping this week. What will the impact be of this S&P downgrade? Like I said, I really think it's immaterial. There is no other place for people to put their money other than in U.S. debt. It's still the safest place. The downgrade, it's really meaningless in my opinion, and should be viewed as so, especially if it gives a very nice buying opportunity over the next couple of days. We've got the Fed meeting on Tuesday. There's no way the Fed is going to let this economy slip back into a double dip recession. They are going to be pumping serious liquidity into the futures if the futures are down big. It could be an interesting thing to look at over the next several hours. Well, actually later tonight and into the open tomorrow, just how the futures action is. You'll have all the panic traders who are still long jumping out on the open tomorrow, and likely some big volume buyers coming in. Just like, look at the green candle we had on Friday on the Dow. Just a fantastic high volume reversal that, sort of got thrown to the wayside by these S&P idiots. If we look at a 2 and 3 year chart of the Dow, you can see this is that support zone that I mentioned a couple of days ago. Not that I thought we'd get there within a day, of the 11K to 11,200 support area. If we go out and check out the 3 year chart, the scenario we're seeing right now is eerily similar to what we saw last year after the flash crash and that initial spark of the European debt crisis. We went from 11,258 to 9,600, 1,600 point reversal. That's pretty much where we are right now. And then you had the Fed come in. And look at RSI. We are way oversold. We're more oversold right now in this market than we were during the flash crash and the drop that happened after that. SMH, you can see the next area of support, which we kind of touched on Friday, is that $28 area. I picked up a half position on the SMH This is one of the positions I'm going to be looking to accumulate this week on drops. Target is a bounce back to 31, as I mentioned. 20-day exponentials up there at 32.20. Every time we have big volume sell-offs and a rebound after that, this is where they bounce back to. We've gone through a lot of big market sell-offs over the last 10 years that this newsletter's been in existence. So this is how we play it. We go high cash, just like we have over the last 3 weeks, and then we start to slowly move into plays as things look to get washed out. Now, one way I would possibly look to play the SMHs, we've already picked up a half position at 29.10. If we do get a gap down Monday morning, I would be looking to pick up another piece of that position. I would probably go to maybe a 2/3 to 3/4 position if we saw the sell-off continue, and then I would look to add to a full position on a rally back through our initial add point. So that's how we're going to be looking to play the SMH. So one thing we got to keep an eye on, check out the VIX chart. Here is a 3-year VIX measure of volatility. We're getting up there. It used to be like clockwork over the last 10 years. Whenever you saw a spike go up through that 40 level, it meant a market bottom was soon at hand. Back in the crisis of 2008, we got all the way up there to 90. And, during that flash crash sell-off last year, we got as high as 47. So this would be our confirmation that we're getting really, really close. I mean, that reading we saw on Friday, if it wasn't for that BS from S&P, we were looking really, really good for a rally this week. And to be honest, after the market closed on Friday, I was looking forward to this week quite simply because I thought we saw the bottom. It looks like, we're probably going to see some more downside before we get that bottom. 15-minute chart, pretty much straight down. You can see we're riding the 50-day moving average down. So 11,500 is where we may start to see those buy programs really start to hit over the next day or two. So as for tomorrow, over the last couple of weeks, this is exactly what we've been wanting. I mean, we are high cash. This is what we want. Look at how cheap stocks they're just getting taken to the woodshed left and right, and we are just sitting back. We're going to swoop in really, really soon for some very fast, fat gains. The pop scan. I just ran the popper scan. The reading of the popper scan is 0. I have never seen a reading of 0. 0 stocks, $15 and under. Even during the crash back in 2008, there were stocks on the popper scan. There are 0 stocks right now. So this is about as low as it gets. This is the third super low reading we've gotten. And, we did enter a little bit on Friday saying we had a possible bottom. News always trumps charts. But this kind of market action, a bottom is at hand. We're never going to catch the exact bottom. We did get lucky back in 2008 a couple of times nailing those bottoms a day or two early. Remember back in 2008 at the bottom, we got in the day before, we loaded up, and then the market dropped big the next day, and we were going, oh crap, we may have timed this wrong. And then 3 or 4 days later, we were 20% higher. So, you're never going to catch the exact bottom the way you move in, especially being high cash. I mean, we're high cash, stress-free. We can go out and do our shopping right now. As I mentioned, some of the plays we'd be looking to shop. GS, Goldman Sachs calls. These calls were up with the stock down on Friday. Tremendous volatility coming into them. Another one to definitely take a look at. These are all the high beta stocks. Caterpillar. This was at over $100 a week or so ago, and here we are down here in the 80s. So you'd be looking to go out 3 months on the call options as we start to nibble. Google, another one, high beta, taken to the woodshed, could see some more downside. If they manage to gap this down to the 550, 540 area, great pickup for the options. Same thing with Apple. I mean, you pretty much need to just go down the high volume, high beta brand name stocks and start looking for some options. So definitely come into the chat room tomorrow. We're going to be trading the ETFs, these large volume stocks. We're going to be looking to pick up some calls, 3 months calls. We've got a long window. And another rule during market times like this, you got to consider, if you buy a stock right now, are you able, do you have the patience, do you have the bank account to be able to sit on that play for a month or more? Are you able to buy a stock right now and have a 2-month time frame on it? If you are, then it's okay to buy. If you're not, then you continue to sit back and then wait for the inevitable bottom and then start buying the retrace. I mean, a lot of traders, a mistake they make when they're calling bottoms is they go in full positions on a bunch of stocks and then stocks fall further. They lose all their buying power and they can't add to their position. So that's why we take the nibble little piece approach, especially when we get in markets like this. So I've rambled on quite a bit. We're not going to go over any stocks because we're just going to be going shopping tomorrow when the opportunities present themselves. But again, my thoughts on the S&P downgrade, while there may be a gap down tomorrow, and there may not be. This may surprise people that if we go green tomorrow, although chances of that are slim, I think the S&P downgrade absolutely meaningless at this stage. And, just to put it in perspective, this is the first time ever a rating agency has downgraded the debt of a country that's trading at record lows. I mean, the Treasury note is right at record lows right now, so it doesn't matter what they do. It is the most liquid, most safe market there is for debt. And people and countries are going to continue to buy U.S. debt and keep rates down here. So S&P, go F yourselves. Hopefully now someone will actually investigate these crooked fucks and do something about them. This financial crisis we've been in was pretty much powered by these three idiots of S&P, Fitch, and Moody's, in my opinion. And maybe we'll finally get some criminal investigations. And actually, if you've been reading the news that's out there, the justification for the S&P downgrade, there was an argument with the U.S. Treasury. Their math was off. They were off by $2 trillion in their math. This is a rating agency that can't even get their math right. So who's going to pay attention to it? AA minus versus AAA. It was already priced in. They already leaked their info to their preferred clients and the people who pay them to destroy banks and countries. And, I wouldn't be surprised to see those same people buying any dip tomorrow, which is what we've got an eye towards. So that's it for the video. If you've got any questions, feel free to send me an email. Otherwise, just hit me up in the chat room tomorrow. Looks like it's going to be a pretty interesting week coming up with the FOMC, the Standard & Poor's downgrade, and just a really deeply oversold market. So enjoy your night. We'll see how the Asian futures or Asian markets act in a few hours and what the futures hold. So see you guys tomorrow. Goodbye.